Thank you for checking out Fieldman, Rolapp Associates Municipal Market Update for the week of July 19th, 2021. My name is Adam Bauer. I serve as CEO and President of Fieldman, Rolapp Associates. Fieldman, Rolapp Associates is a municipal advisor to government. The first and third Monday of each month, we release municipal market updates, and at times we release them on other weeks as well. But as we get into this week, we are starting with the municipal market data yield curve, and we have years 1 through 30. The gray bars represent the range of interest rates for each one of those maturities going back to 2005. And that red line represents the MMD as of July 16, 2021. And as we spoke about last week, you can see we are near the bottom, meaning we are very low on interest rates when you compare to that scale going back to 2005. On our next slide, what we try to do is show how that MMD yield curve has changed. We've basically taken 3 snapshots. We have 5 years ago, which was 2016, and that's that red line. And then we have the 2 green lines. The darker green was from 1 year ago, and the lighter green was from just current, July 16, 2021. And you can see there on your maturities 5 through 10, we're just a little bit higher than we were a year ago. And basically years 14 through 30 were just a little bit lower. And so that really highlights just how low rates are right now, because a year ago it was considered very, very low. And we are a bit below that in many of the maturities that really matter. On our next slide, we say, kind of try to capture kind of why is why are rates so low? And one of the things we're trying to show here is the inflows and outflows in the municipal bond funds. The green bars represent inflows, the red bars represent outflows, and you can see it's pretty steady inflows with the exception of the pandemic interruption of last March and April. So you have all that money flowing into the municipal bond funds, but how much more in new bonds are there available? And that's what this chart tries to look at. That red line the dotted line represents the kind of weekly volume average from 2019. Then the lighter dashed line is the 2020 average. And then the 2021 is just slightly above that. And for much of the year, we've really looked at the 2020 being a bit above 2021, but we seem to be in a very similar range now. And hopefully you also notice is that far right, that hashed bar represents that we have a pretty hefty level of volume, but not enough volume that it's caused rates to go up. So there's still enough money flowing into municipal bond funds that we are still seeing very low rates, and that even though we've had an increased level of volume, that is not increased rates at this point. So the 10-year Treasury versus a 10-year MMD, and we've looked at this in many different ways, but I think one thing that's really important on July 19, 2021, is the 10-year Treasury is down to 1.195. And the 10-year Treasury was, in the last 52 weeks, was as high as 1.778. So while inflation, you can see there where the rates were trending upward, there were some real concerns about inflation in that kind of mid-January to mid-March of 2021. And you can see how the 10-year Treasury drifted upward in that time frame. Then we've had kind of a steady decrease. It looks like a typical financial chart, some ups and downs, but really a decrease down to this 1.195 range. So if investors are fearful about inflation, they certainly aren't showing it with how the 10-year Treasury has been driven lower. There's been a lot of talk on the business cable news this morning that with the variant for COVID out there, that maybe the real positive economic start that we had, at least maybe cooling, may not be as aggressive as it has been. And maybe investors say then the Fed will maintain lower rates longer, and that therefore owning treasuries is a good investment for them. That's just one theory for kind of why that 10-year Treasury has drifted so much lower, when just a few months ago, when there was some real fear about inflation, it was drifting so much higher. So here's some of the economic data coming up, and certainly, like I've told you in the past, in this environment we're in, It's really, if these numbers come in dramatically different than expected, they will certainly have an impact. Finally, on our last slide, here are Fieldman Rollapp's registered municipal advisors. I encourage you to reach out to any one of them for additional information. I thank you for your time, and I look forward to talking with you again in 2 weeks.